Welcome to this week's ASX edition of Trade the Trend, a weekly video discussing where the stock market is heading. This week's video will be discussing the ASX 200. I'll also be talking about gold. I'll look at that a little bit later, so make sure you stick around for that. I've discussed the S&P 500 in a separate video, and I'll leave a link for that in the description section below. As always, it's general commentary and doesn't take your personal situation into account. All right, with that said, let's jump to our first chart. So what we have on the screen is ASX 200, and you've got to say the ASX 200 has been one of the most resilient developed markets over the last 6 months. It's held up better than the S&P 500 and better than the US markets generally. But I think the scope for a rally in the ASX 200 at this stage is looking more muted than it is in the US. You see, the reason I say that is the dominant pattern on this chart is this big resistance band, which comes in between 3,750 and 3,900. Picks up a couple of high points from over here in late 2020, early 21, and it's also got several low points over the last year or so. And I think that just looking at the ASX 200 over the last few days, I'll look over the last week, it has been able to rally, but despite that positive lead from the US, it really hasn't been able to make much headway into this heavy overhead resistance area. And unlike the S&P 500 and the Nasdaq, it hasn't been able to close above its 50-day moving average. So this is a 50-day moving average coming through here. In the US, we're seeing markets getting above their 50-day moving average. ASX 200 hasn't been able to do that as yet. So from that standpoint, I don't think this market's in a strong technical position. And if you've seen my video on the S&P 500, you know that I've been talking about the potential for a further rally in the US markets potentially over the next few weeks. And if the US rallies, if the S&P 500 rallies, then of course this is going to naturally be a positive for the ASX 200, and it will probably rally as well. But I just can't get excited about the technical setup that we're currently looking at. It's just not a market that I'm in a hurry to buy at this point. But I will tell you about an area of the local market that is looking a bit more interesting, and it's over here in the ASX Small Ordinaries. So unlike the ASX 200 that has held up relatively well over the last 6 months, the Small Ordinaries has been hit really hard. It was down at this point here in late June. It was down around 27% from the peak. So in about 6-7 months, it fell 27%. And it looks a lot more like one of those US indices than it does the ASX 200. There was probably, I think a big factor driving this was probably one there was a whole lot of fear in the market, but also a lack of liquidity at the small to mid cap part of the market probably also exacerbated this fall. But what we're seeing now, which is really interesting, is that prices are breaking to the top side of this pattern that we have on the chart. And now you may remember that I was talking about this last week. So this is a bearish. It's called a bearish flagging formation. It's similar to this one which we had back here in May, and this is typically how these patterns work out. You'll have a decline. You'll have the market will slowly sort of make its way higher in a rebound, and then it will break to the bottom of the pattern and have another hard sell-off. That was what I was worried about last week when I was talking that the potential was the market would break out of this pattern. But what sometimes does occur is the breakout to the downside doesn't happen, and instead you end up with this like a stepping sequence that breaks to the top side, and that's what we've seen happen. And it's also closed above its 50-day moving average, which is another positive, and that hasn't happened since back in April. So the last time the Small Ords closed above its 50-day moving average was back here in mid-April. And so what's been interesting is that many of these smaller cap stocks have really been sold off heavily this year, much more so than the bigger stocks in the ASX 200. The ASX 200 has really been propped up by big resources and big banks. And as I was saying a moment ago, I think a lot of the decline was probably made worse due to a lack of liquidity in many of these small to mid-cap names. I know with my own portfolio, when I was trying to sell some of my smaller cap stocks, there just wasn't much liquidity there. And then if you're trying to move really large lines of stock, that's going to force the price down. And I think this could now start to work in reverse and possibly fuel a larger bounce over the next few weeks. I think the Small Ords I think it's got more upside potential here. And I actually did think about buying some ETF through the week. I was looking at the iShares Small Ords ETF, with the ticker code is ISO. I ended up not doing that. I looked at it long and hard, but in the end, I decided that I'd rather continue playing defensively. So for me, the prospect of a bear market rally I think it's just too much on the table that I didn't want to play around the edges and try and get in early. But that said, there is a case for getting some exposure if that sort of positioning is right for you, as maybe as a medium to longer term play. And I think to keep this rally scenario in check. Keep it in check. I think we want to see the Small Ords hold above this level through here, which is around 2,780 to 2,760. And that marks these two high points that we had from June and July. And what we want to see develop is a series of higher highs and higher lows, which has started to develop through there. And now we want to see, like, when this market pulls back, does it just pull back? Is it a shallow pullback followed by another high? That's a sort of positive price action that we want to see develop on this chart. And the next thing we want to see would be for these moving averages to start turning higher, and then for the 50-day moving average to get above the 100-day moving average. But, that is, the thing which holds me back with this is that this could also be a longer period of base building, which would be quite typical after a big decline. I don't think we should necessarily expect that we get something like this, another V-shaped recovery, which happened after the COVID period. They're not typical recoveries. V-shapes do occur, but we've just had it during the COVID period. To get another one, I'm just not sure that that's what we're likely to see. It could be more like this time that we see more of a longer base develop over several months, and like a longer base could look something like, I'm just making this up, could chop around for a while and then start to make its way higher. So that would be a longer basing sort of formation, and they're the sort of things that often occur, and they can take several months to play out. And what that also does is, when you get this longer sideways basing, it gives the moving averages time to stabilize and then start to turn higher, and that's when you can get some good entry signals. So that's more like the scenario that I'm probably favouring, but there is a play now. There is a play now for those who want to be a little bit more aggressive about approaching this market. Now, if you're getting value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube people are watching, people are engaging, and YouTube shows more people, which helps me so much. And the subscribe button, please hit that. Sends YouTube another great signal. And if you haven't already done so, come over to my website at motiontrader.com.au and see the sort of work that I do there and how I'm helping investors work with their portfolios and helping them navigate markets. So please come over and have a look at what I'm up to. And what I want to do now, I'm going to have a quick look at gold, which has had an interesting week. Because what gold did during the week, it hit this support band down here at 1,680. So I was speaking about this support band a couple of weeks ago, and I think we've spoken about it probably a few months ago as well. It's been a significant support level on this chart for a while. And now, the thing with gold, it's looking quite stretched below these moving averages. And often when a market gets stretched below the moving averages, it does snap back. Kind of like what we saw here. It got stretched below the moving average, and then we had the rebound. And so I don't think we should be surprised if we see gold bounce off this over the next few weeks. But that said, I don't want to be buying just yet. It's for me, it's too much a case of trying to pick the low. And I look at a lot of those gold stocks, those ASX gold stocks, and it really is a case of going, well, I'll just buy now and see what happens. There's not enough structural setup there to make me think now is a good risk return opportunity to get in. But I do think this is going to be a great opportunity here at some point. And in commodities general, also in that copper space, I think there's some terrific opportunities which are going to develop there. But I just think we need to wait. I think we need to wait for the right setup. This looks like, to me, this whole period through here over the last year or so, it looks like a big consolidation. We had a big move up, we're having a big sideways consolidation, and ultimately, I think the odds favour that gold is going to break to the top side, or break above these highs and head off to the new higher levels. But like most things in the markets, it requires patience and not boldness. And I'll have a closer look at gold when I start seeing signs that we do have a base forming, and we do have some signs that maybe we're turning higher. I'll be watching it closely. I'll come back and look at it more detail then. But look, for now, let's leave it there for this week. A lot of interesting things going on. Hopefully that's been helpful for you. And look, thanks for joining me. Please give me that like, short comment. Come visit me at the website, and look forward to coming back and talking to you next week. So thanks for joining me, and bye for now.